Ron, let's talk a little bit about the topic that was hot earlier this week, and that is inflation. The Fed seems to be saying it's not terribly worried about it if it spikes up because the measures are going to be coming off extraordinarily low points a year ago, so the year-over-year numbers may look more concerning than they really are. Where do you come down on that? Interest rates are roughly where they were a week ago.
Yeah, and you haven't seen the bond market vigilantes, Tyler, really lose their minds over this. Inflation break-evens at the 5-year lookout are at 2.5%, at 10 years, 2.4%. So we've seen a bit of an uptick lately, but again, not a huge acceleration. In the GDP report, the personal consumption expenditure deflator was advancing at a pretty fast clip, 3.8%. But in the personal income and spending data today, it was slower than 1.8. So I tend to think that it's a one-time level reset that'll work its way through, as we've discussed before. And granted, the Fed's buying a lot of bonds, so that could be a constraint on long-term interest rates and their ability to send an inflation signal. But I still think the bond market vigilantes would overwhelm the Fed if they were concerned that we were going to get out of control here.
Gabriella, final question to you. If we're focusing solely on American stocks, U.S. stocks, we include multinationals, obviously, are there one or two sectors that you would favor putting fresh money to now and one or two sectors that you would shade or fade right now?
Yeah, so I think ultimately our view for the U.S. is still positive. 12 months out, years out, we think the trajectory is upwards. It's just that we're in a much more mature phase now where the pace of return slow. You see some corrections along the way, and then you have some tug of war back and forth between the value and the growth style with dispersion beneath the surface. So in terms of the value side, financials would be our top pick. We do still think the curve continues to steepen. We're only halfway there. The biggest steepening happened very fast, but we're still not done yet over the next 18 months. Financial is the best way to play that. And then on the growth side, technology, broadly speaking, is still a long-term structural theme. That's the U.S. If you want to do that globally, Europe is the best value cyclical play, and then China, the best one in terms of structural growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.